All right, so I did my company on AT&T, like you just said. Today I'm going to be going over the investment thesis, the industry outlook, as well as the company overview and evaluation. Um, so for those of you that don't know, AT&T is currently the world's largest telecommunications company. They're also the largest provider of mobile phone telephone services, and they're also the largest provider of fixed telephone services in the United States. So some key statistics about the company. The current price of the company is actually $28.51. And in comparison to the 52-week high of $37, this is roughly a 30% discrepancy. And they're also still near the 52-week low of $25. So with that being said, if we were to buy now and just for the price to go back to where it was before COVID, that would be a 30% gain. On top of this, the company also offers a very high dividend yield of 7.4%. So with that being said, my recommendation is obviously a buy. The main catalyst or driver for this company is probably the 5G expansion. The company expects to generate a lot of sales from this because they expect to bring in new customers that want to use the 5G network, since they're one of the few companies that offers 5G right now. On top of this, existing customers are also likely to upgrade their mobile to phone devices because older phones are compatible with this network. So they'll also see a spike in revenue from this as well. Another big driver for the company is the HBO Max streaming service they just released this May. They already have 8.6 million customers, and they're projecting to have nearly 50 million customers by the year 2025. So if they do achieve that goal, it's very likely that the stock price will just skyrocket and revenue will increase as well. There are some risks, however. Since AT&T has 250 million customers, they're a target for data breaches. If the company was for whatever reason, hacked or the data was breached and private information was leaked, the company could face lawsuits and the share price could be negatively impacted by this. On top of this, the company does face some competition, their main competitors being Verizon and T-Mobile. They also face competitors now from streaming services such as Netflix and Disney, since they launched the new HBO Max streaming service. But AT&T has been a pioneer in this industry, and I'm not too worried about competition, to be honest with you. And moving on to the industry overview, the telecommunications market as a whole was valued at $3 trillion in 2019. On top of this, like I just mentioned, 5G is likely to propel this industry in 2021 and beyond. And surprisingly, the demand for cell phones are still expected to grow at 12% in 2021 and 13% in 22. So they're likely to see an increase in phone sales as well. On top of this, the telecommunications industry is expected to grow 5% a year from 2020 to 2027. So even despite the size of the market cap or the industry market, they're still growing at a substantial rate. As you all know, businesses have been affected by COVID. More people are working remotely than ever before. And as a result of this, the demand for telecommunications has also increased and is expected to continue to increase. I guess one negative side to this industry, the telecommunications industry as a whole, is they're susceptible to downturns in recessionary periods like we're seeing now. Like I just mentioned, AT&T is currently down 30%, and their competitors are also down as well. But on the other hand, this provides the opportunity to get in when the price is relatively undervalued and just enter now. If we were to buy and price were just to go back to where it was pre-COVID, that would be a 30% gain as well. In terms of competitors, Verizon's their number one competitor. Verizon's the second largest wireless carrier in the United States right now. On top of this, their third largest competitor is probably T-Mobile, which is also known as Dutch Telecom. It's the company that owns T-Mobile. For those of you that didn't know, Sprint actually merged with T-Mobile this year, and Sprint used to be one of their main competitors, but now they're underneath T-Mobile's umbrella. On top of this, their other competitors consist of China Mobile and Nippon Telegraph, and China is also the largest telecommunication company in China, and Nippon Telegraph is based in Japan, but these competitors are not as significant as Verizon and T-Mobile or Dutch Telecom. In terms of market cap, Verizon's a clear winner here, but prior to COVID, AT&T was the market cap leader. But like I mentioned, the stock price dropped 30%. and their market cap therefore dropped 30% as well. So they're not the leader in the market cap anymore. In terms of revenue, though, AT&T is the winner in that regard. They have substantial amount of revenue over Verizon and its competitors. As far as the company goes, AT&T is a communications holding company. And like I already mentioned, they're currently the global leader in telecommunications. On top of this, they're also the largest mobile telephone service provider in the United States. The company provides pretty much anything communications related. They provide security services, directory advertising, publishing, and so on from there on, internet access, messaging, etc. The company operates in 4 primary segments, including communications, Warner Media, Latin America, and Xandr. Their largest segment is communications, and underneath this segment, they provide mobile phone services, broadband or internet, and video. So this is probably what you all know AT&T for. But in the past 2 years, the company has tried to differentiate themselves a bit, and they diversified into different markets. And in 2018, they actually acquired Time Warner, which is now called Warner Media, and it's their second largest segment. Underneath the segment, the company owns HBO, Turner Broadcasting, which owns CNN. And under the segment, they produce TV shows as well as movies. And some of the TV shows they produced are like Game of Thrones, The Sopranos. So they do a lot of stuff in that regard. On top of this, the Latin America segment provides mobile service and internet to international countries. And then lastly, their Xandr segment provides marketing for businesses on Warner Media's digital platforms. And then some statistics down below. They're currently the largest communications company, and they actually invested a lot over the past 5 years. Like I said, they acquired Time Warner in 2018, and then they also invested in HBO Max. So as far as the segment goes, communications is the clear leader here. It brings in 77% of the company's revenue per year, or $142 billion in 2019. So this is pretty much their moneymaker. Their second largest segment is Warner Media, and it brings in roughly 18.1%, or $34 billion in 2019. And their third largest segment is Latin America, which is 3.8%, or $7 billion. And lastly, their smallest segment is Xandr, which is the marketing segment. And they expect the Warner Media segment and Xandr to grow as time goes on, but these segments are still new. Like I said, they were acquired in 2018, so it's likely that we'll see an increase in revenue in the years to come. And as far as management goes, the current CEO of AT&T is John Stankey. He's been with this company since 1985, or 35 years, and he's served in a number of different leadership roles throughout his time at AT&T. He received his MBA at UCLA, and the people that know John say he's a very straightforward person, and he's not driven by his ego like a lot of other CEOs. He really cares about his employees, and he takes pride in AT&T and what the company stands for. John J. Stevens is the Senior Executive Vice President and CFO of AT&T, and he's also been with the company since the 1990s. He's also held a number of different roles within the company, like everyone else in the management of this company. He received his JD degree from St. Louis University's Law School, and prior to this, he received his degree in accounting from the University in Kansas. Jeff McElfresh is the CEO of AT&T Communications, which is the largest segment of AT&T. He's also been with the company for over 25 years now, and he's also served in a variety of different roles at the company. And he's pretty much the brains behind the operation right now, since he leads the largest business segment here. And he received his MBA from Northwestern University's Kellogg School of Management. And then moving on to valuation. During the last 8 periods, AT&T has consistently beaten the EPS and revenue predictions, and they beat those estimates or predictions 6 out of the last 8 times or periods. In addition to this, they also beaten analyst predictions 7 out of the 8 past periods for net income as well. This shows that they've been undervalued by analysts, and they've been outperforming consistently pretty much all analyst predictions. On top of this, some valuation metrics for the company. Their PE ratio is currently underneath the industry average, 15.26. and their price to book is undervalued. And lastly, their enterprise value to EBITDA is under the industry average, which may indicate the company is undervalued, which is no surprise since the stock's down 30%. And moving on to the valuation of the company, I produced a discounted cash flow analysis for AT&T, and based on the previous free cash flows from 2013 to 2019, I was able to project or predict future cash flow of the company. And based on these predictions and using a WACC of 4.6% or cost of capital, a target price for this company is reasonably at $52 at an 8 multiple. Usually within this industry, companies trade at an 8 multiple, so I think that's a fair assessment. Even at its current multiple of 6, that would put the target price at $35, which is about $7 more than their prices right now. So with that being said, I would say it's fair to say this company's undervalued. In terms of revenue, AT&T's revenue has really stood out from its competitors. Their revenue growth has grown at 6.5 or 5.8% per year on average since 2013 versus their peer average 2.94%, which is about double their peers. On top of this, over the last 2 years, AT&T has been able to add nearly $21 billion to its revenue base, and this is largely due to their Time Warner acquisition. The company's generated a significant amount of money from this acquisition, and it's expected to grow in the future as well. With that being said, revenues project to grow at 6.4% in 2021, and probably much more and beyond. And lastly, I just wanted to help you guys visualize what the price of AT&T currently looks like. So over the past decade, price has been trapped within this channel, as you can see. And prior to COVID, where that yellow circle is right at the top here, price was nearly $40, and price has come down 30%. So with that being said, even if price were just to go back to where it was prior to COVID, we could see a 30% gain. But based on my target projections, I'm expecting it to reach the top here where the blue square is, and that'll be a substantial amount of gains. And on top of that, like I said earlier, the company offers a 7.4% dividend yield. So we'll pretty much be making 7.4% guaranteed in addition to the 30% we could make just going back to the previous highs pre-COVID. And that's all I had. Any questions?
What else do we have in the Thunder Fund that's in this sector?
I think there's only one more company. I can't remember off the top of my head. There's
And
still
what
some.
sector is this in?
What was that?
What sector is this in?
Communications.
Isn't Walt Disney Communications?
I believe so.
Yeah, I believe it's just Walt Disney we have there in Thunder Fund. Okay.
Yep.